Good morning and welcome to my morning report analysis videos on Tuesday the 29th of January with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly settled outlook to the markets today, nothing too significant in terms of direction across Forex. A little bit of movement around on sterling. I think that's going to be the main factor that we need to watch out for today, in the fact that we have this Brexit vote, or series of votes in Parliament on Theresa May's Plan B. There's going to be a whole load of amendments that Parliament is likely to vote on this afternoon into the evening, and it could start to manipulate the direction of which Brexit could be taking in the next couple of months. Obviously, this 29th of March Article 50 end date is approaching fast, and exactly how the politicians can get their act together before that time remains to be seen. But certainly this today could have a key sort of outlook defining moment, actually, so we need to watch out for that, and sterling will be reactive to that today. It's interesting that we saw FTSE 100 sharply down yesterday, but look at that rebound, over 1% higher. And other than that, it's equity markets are a little bit mixed. You had the S&P 500 down last night, futures also a shade lower. Asian markets basically mixed. Nothing really doing in terms of direction there. It's only really FTSE that's gained any real direction today at all. This is another key one here. Gold, 1308, within $2 now of a breakout above what I believe to be a key long-term pivot. There's a band of resistance pivot between 1300 and 1310. That is a key level to watch, and I'll sort of go into that in my analysis video in a bit. So yeah, we've got a fairly stable look to Forex, and this dollar market sort of dollar index continues to sort of remain a bit subdued in the last couple of days, having had that sharp break to the downside on Friday, and no real suggestion yet of a pickup. So we're watching out for that as well. But trade talks between the US and China start tomorrow, so the markets will be looking towards that. And in front of that, we've had Washington filing court proceedings or criminal proceedings against the finance director of Huawei, and that's hardly going to set up the talks in a particularly positive light. Anyway, so Brexit is the big focus today. Now, in terms of data points, we have the data out of the States really in the focus today, where we're looking at for the Case-Shiller Home Prices Index and the consumer confidence. Now, Case-Shiller is expected to drop to 4.9%. Again, that would be another month of decline. Look at that run of months in a row of decline, and we're now sort of, that would be back to levels not seen since 2015 if that were to be the case, at 4.9%. Consumer confidence expected to drop back to 124. That would be a low dating back to 2018 as well. So yeah, this is an important reading potentially in the consumer confidence, especially if it starts to track seriously low. That would be 3 months in a row of decline. And that is going to be this afternoon. But as I said, the Brexit vote is tonight. I believe it's starting around 7 o'clock. Now, my chart of the day is Brent Crude. Now, what I do is I look at WTI every day on my morning report, but it's interesting to see that the deterioration is actually coming stronger through Brent Crude, and that comes through the technical downturn in the stochastics, which is accelerating lower. The MACD lines are threatening to complete a bear cross. We saw the RSI dropping below 50 yesterday. That's multi-week lows, and we're starting to see lower highs forming. That's at 61.90 below that key reaction high at 63.15, but also lower lows as well. Yesterday was a lower low, and 59.50. Initial little rebound today, but not a great rebound. It sort of looks as though it's setting up for a test of this key sort of pivot area around the 23.6% fib at 58.60. You've got that reaction low at 58.90 from earlier on in January. If you break below that, then that really does turn the sentiment around again and turns it negative. So this is an important moment that we're seeing for the oil price. Now, we've seen a little bit of an intraday rally today. Can that intraday rally basically break out above 59? 61.90. That is the key question. There's an overhead supply that is now hitting between 60.50 and 60.70. So that is the initial resistance, this overhead supply of all these lows in the last week or so. That becomes overhead supply and selling pressure. But the ultimate improvement would be above 61.90, and that would help to improve the outlook once again. But for now, obviously, we're looking a little bit more corrective, aren't we, on these momentum indicators on the daily chart, and it's something to watch. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.